Hi, I'm Claudia Pinkowski from The Papers. We're here with the real Katy Perry, CMO of zerohash, and she's going to talk us through to the company's stance on regulation, what's in the books for stablecoins, and what they're planning to do next. Stay tuned to find the exciting news. So in zerohash 2026 stablecoin momentum report, we can see that stablecoin is no longer just about trading. It is now embedded across brokerage funding, payments, cross-border payments, almost everywhere. What is the one use case that surprised you the most when you saw the data? And what do you expect to see in the future?
We see a lot of interesting use cases at zerohash. Of course, we do digital asset infrastructure across trading, transacting, and tokenization. That transact pillar within our product has seen so much momentum, and that's what was captured in our stablecoin momentum report that you referenced. We saw a lot of institutional volume increases and also habitualized behavior among everyday consumers using it, so repeat usage of stablecoins. So the breadth of use cases is what's so exciting about stablecoins right now. You have things like treasury, B2B payments, remittance, but also things like real-time account funding. So Interactive Brokers is one of our partners. You can fund your account in real time using stablecoins. Kelshi as well in the US, obviously the prediction markets app. It's really great for if you want to move money without friction very quickly. We also work with companies that are using it for payroll. So Gusto is a prominent fintech in the US. A lot of US businesses, small businesses, are using contractors from overseas. And what they can do with stablecoin payments is actually pay those contractors pretty much instantly. And this used to take days or even weeks. So there's a lot of really interesting use cases, whether you're moving business to business within a company or business to consumer.
Nice. I will reference another one of your reports, Crypto and the Future of Wealth, that shows that 51% of high net investors aged 18 to 40 have already moved assets away from advisors who don't offer crypto. Do you think traditional finance has already internalized this idea, or do they still need time to catch up?
Yeah, this report was so fascinating because it really underscored a lot of what we've been seeing and feeling in terms of the institutionalization of crypto, but at a level of actual wealth management and what that means for wealth management companies and platforms. AUM and maintaining customer AUM over time, keeping those assets in platform is so important to the longevity of these businesses. And when you talk to younger, affluent investors, and the people in our study were mass affluent to very high net worth, they said that they were really looking for integrated experiences. They're looking at crypto as part of a broader portfolio strategy, and oftentimes not just a speculative asset that they're sort of playing around with. This is a really important core pillar to their wealth building. And so the findings showed that these platforms really need to think about integrating these capabilities in a way that reaches sophisticated audiences, or run the risk of losing those customers potentially forever.
zerohash is known as being one of the most regulated company, at least in the US. And I'm curious to know if or how that made the company more trusted by institution, or if it does make it being a bit more rejected by the crypto native community.
Yeah, it's such a fascinating conversation. I think with zerohash, regulation compliance has always been core to what the company has been building since 2017. As you mentioned, we're one of the most licensed businesses doing what we do. And that was really intentional from the start. We really knew that we wanted to operationalize these digital asset use cases among institutions, and they have some of the highest bars for compliance of any industry. We talk about working with a Morgan Stanley, a BlackRock, Franklin Templeton. The level of rigor that they require among partners and the level of compliance they apply is really as high as you can get. And so for us, it's imperative that we really put compliance first and foremost. both in the US, but also Europe. We received our MiCA authorization last fall, and we also just announced we received our EMI license from the Dutch Central Bank. So sort of doubling up our coverage there specific to stablecoins and getting ahead of sort of the pent-up demand that we're seeing among these use cases. I think with the crypto native community, it is an interesting conversation with should it be regulated, or should it be integrated and embedded? We really believe that regulation leads to acceleration. Institutions want that regulation. It gives them confidence to move forward, and that's why we've seen such growth in those areas of the business, both in the US and in the European Economic Zone.
Another natural step when it comes to stablecoins was, I think, agentic AI,
Yes.
agentic commerce. It really accelerated the talking about stablecoins. Do you think that AI agent economy accelerates stablecoin adoption faster than anything that was before? And is Zero Hash ready to be the infrastructure behind agentic commerce?
What you see is a lot of interest and buzz around it, and the intellectual conversation is really pushing a lot of things forward. What's catching up is sort of the product realities of it and the actual usage. There's so many interesting applications that I think a lot of businesses are looking at it and saying, wow, I don't even know where to start. With stablecoins, though, they're really essential to these systems. You need a programmable way to move money. You need checks and balances, whether it's in terms of compliance or rules-based decisioning that these systems will use. So we're really excited about it. I think our infrastructure, our stablecoin product, is perfect for these systems. It's a necessary aspect to plug in as people think about them. We're currently talking to a lot of people about it, and it's interesting, the conversations we're having with companies is around co-building and co-ideating, because companies have a challenge that they want to solve using these agentic systems. They don't necessarily think, oh, I need stable coins for that. They think, oh, I need a certain regulatory workflow. I need certain ways of decisioning to take place. And that leads them to understanding that they're going to have to upgrade Rails for it. And so it's a really interesting conversation that starts at actually coming together to solve business problems versus just somebody raising their hand and saying, I need stable coins for this. And I think that's where you see a lot of the interesting use cases around stable coins. It's solving a problem that exists.
If you had to make a controversial prediction about where crypto and digital assets are going to be in 10 years, what would it be?
I think in 5 to 10 years, a majority of people who use digital platforms to either manage money or move money will be using some sort of digital asset product, but a lot of them won't even know they're doing it. They won't know necessarily it's stablecoin payments or funding. It'll all sort of be this invisible infrastructure. And the reality that the end consumer will see is just less friction, faster money movement, lower fees, and in the end benefits. So better experiences, but not necessarily understanding the core blockchain infrastructure for the majority of people.